Hi, and welcome to the Market Alert for Wednesday, the 18th of May 2022. So stocks surge, bonds purge as Fed speak offers nothing new. Investors need to stop looking for monetary ghosts and reacting to what are simply reiterations in looking for things that have happened in the past and to continue, i.e. QE, etc. So the Fed, it says in this headline here, the Fed to keep pushing inflation until inflation comes down. They were the key takeaways from the Powell interview yesterday. And also on in sort of inflation front, OPEC ministers warn no increase in supply is coming online. And China's protracted lockdowns cause critical shortages in the West. So there's no let-up in the inflation scenario we're currently seeing. Today is Wednesday. What have we got? So we've got CPI from the UK. Of course, it's Wednesday. 9.1 is forecast from 7%. We know it's already higher than 9.1, but let's see if the powers of be will allow this 9.1 to actually be seen. Maybe they will, because after all, Bailey has been out, hasn't he, talking about apocalyptic food prices. So I suspect he's already been forewarned, and that's a good idea that it's going to be in this area, if not higher. And finally, the gold-silver ratio is certainly making its way lower, down to 83 from 88. And that means that silver has been moving higher to the upside and faster pace than gold, which we'll see in just a moment. So let's have a look at the markets. Yesterday we had our third day up, and this was the momentum was provided by the Fed. It's going to be difficult to try and hold this at this level. We've got a 50% retracement here in the Dow, and any sort of move back now, we're going to have to look at the 5-bar moving average. We go from this low to here, and you'll see that ties in with 38%. There could be some weakness around today because we've got 3 straight days to the upside in the Dow. You can see what the market wanted to do until Powell, the sort of an hour after opening. They then brought the market back, and again you can see that when Powell started to speak, the market was slammed down for 30 minutes and then it was brought back, but there was no follow through there at all, and then the market's drifted down overnight to the DP level, and the 50-bar moving average is still oversold at the moment and has room to move to the upside, to the close or to the high. As I mentioned yesterday, the market was likely to go to the upside, and it did. It went to the previous day's high. Don't discount this, but we are getting close to where the market will need to correct further on the downside, because what have we got that's going to move the market to the upside apart from the manipulation and the high frequency algorithms? In the DAX, we're up how many days now? How many green bars have we got? We've got 1, 2, 3, 4, 5, 6 straight days up. The market needs a breather here as well, so I'd be inclined to draw in some fib retracements there. 38% takes you down to the 20-bar moving average, and the 5 is in the way, and also we've got the 50 EMA as well, which the market managed to get through. That could lend support here as well. But again, in the 30-minute chart yesterday, you can see it was a one-way bet all the way up, all the way through the morning, all the way till lunchtime. The market trading sideways there, and coming back to the high after it drove through the high. As I mentioned in yesterday's alert, that's always gun for the high if they can. We had some buying coming into the market at this time, which is going to this is the Dow kicking off here. This is the first half an hour of the Dow, and then all the way through to 4 o'clock-ish. And then the market moving up, and again you can see that down and then back up, and then following the Dow and creating a new high of 14,271, way above the 14,000 at the moment, which is not on the graph at the moment. So let's just have a look. There you go, it's down here. That's the 14,000 psychological level down here at this red BRN there. So long way back to there. We've got 100, 200 points for the DAX to move down to that level. And yesterday in the 5-minute chart, you can see the market there finding support. We kicked off in the futures markets. Prices managed to move higher, then they came back, and then they tried to rally again. We had to shake out at this level. Once they were shaken out and oversold, the market was free to move to the upside, and that's how it continued throughout, trading in a range. Then you can see that range of the market until we double topped here, and then the market selling off initially rallying with the Dow, then selling off until we saw prices recover. And then we've got Powell through the evening there. That's the market action when Powell was speaking. And then overnight, you can see that the DP is holding the market at the moment. It was oversold. The market's rallied. We have another pullback there to the DP as well, which looks around about a 50% retracement. And prices have 50.62 there, have continued to move to the upside. We are overbought at the moment, but here's your high where the market's likely to gun for. Try and keep that momentum to the upside as it awaits the news. Mind you, saying that the news will be out as the futures market opens. What I mean by news, obviously, is the CPI numbers from the UK. Let's have a look at the currencies. GBP moving up sharply yesterday. You can see prices there trading up to the 78% retracement from this high back to here. A 20-bar moving average in the way there as well. In the intraday, you can see the move to the upside there, and then we had a situation where prices made new highs, and with the momentum was starting to drop off a bit, which is highlighted there. However, prices only came back a small amount, 50-60 points, before they went back up to 89, and you can see the momentum dropping off there with divergence, and prices have moved lower to the DP, which is no surprise whatsoever with divergence crossover, and has moved up a bit there. On the overnight, the pound rocketing up yesterday, and this is on the comments from Bailey the day before, and also a bit of softness in the dollar. You can see their price is trading up to the 20-bar moving average, which is just above the golden ratio there. So if the dollar gets a bit of strength behind it, you can expect a bit of a retracement, especially if it's starting to make a new move to the upside. You'll need to pull back there. And in the 30-minute chart, you can see the market's reaction yesterday, sitting on the high of the previous day. If you can keep above the previous day's high, you can then move the market to the upside. But then it remained in a trading range of 50 points overnight, which we can see there as well. And finally, in the metals, we'll start off with silver. Another update for silver, but starting to look weak again. Expect the market to come under some downside pressure. Like I say, it's got to retrace. It's not over on the downside. I'm still have the order in for just below $20, $19.98, if it comes down to that level. Gold also coming down faster than silver, which is most unusual, as you can see here, and again down on the overnight, down a 50% retracement from here back to here, which would be nice. You get a nice retracement and then start to move back to the upside. In the crude oil market, prices showing a bit of supply yesterday, trying to absorb, but as we saw from the headline, there is tight supply. Well, that's obviously engineered, because the Arabs then can make a lot more profit out of it by keeping supplies tight. Also isn't going to help with inflation, is it? And the diesel problem that America is experiencing, and no doubt we will be too. And then finally, in the dollar, you can see prices have pulled back over the last few days. Let's see where we've pulled back to. We go from here to here. We're down to the golden ratio, 62% there. And see if prices will hold. They've come back through the 50. 62 is crucial, as is the 20-bar moving average. Any bounce off this level will have these fibs to contend with on the upside. They're just ballpark numbers, because I can't attach to this low, as the market is actually trading at this time in the daily chart. Obviously, it could make a new low, so we've got to go off the previous bar's low to do that. Okay, let's see what the inflation numbers are at 7 a.m. and what the market's reaction is going to be. So with that, I will conclude. And as ever, thanks for watching. See you in the next one.